What's up guys, it's John here. The concept of getting passive dividend income, it's awesome. However, most dividend stock tend to pay their dividend quarterly. But our bills come monthly, such as our mortgage, credit card bill, phone bill, and car payment. So do you know you can get paid more frequently? A number of monthly dividend stock can help you better align your investment income with your living expense. Today I'm going to show you 3 of them. Please watch the whole video until the end so you will know how to generate $1,000 monthly dividend income. The first stock is Stag Industrial Inc. It is a real estate investment trust. It owns industrial property across the US, currently at 457 buildings in 38 states. The dividend yield right now is at 4.5% as of end of August. And it's less affected by the pandemic due to the Amazon economy. Distribution center, warehouse, and light industrial facility have never been more critical during this time. So 43% of its building is engaged in e-commerce activities. So it's no surprise Amazon is its largest single tenant, making up 2% of its rental revenue. Their other major tenants include US government, DHL supply chain, and Ford Company. Let's also look at some of their financial metrics to help us assess this company. The price earning ratio is around 45 right now, which is on the high side. So I would think of this as a negative downside factor, risk factor. If we look at the stock price in the last 26 week, which is like last 6 months, it's up 13%, which is quite good. The stock is recovering. The net profit margin is at 25%, which is pretty good also. Usually I like to see net profit margin more than 15%. So this passed the test. The return on equity is at 5%, which is not that good, meaning they're not using their resources as efficient as they can. Usually I want the return on equity ratio to be over 17%. So this one is a negative factor again. The earning per share this year will be up by 88%, which is fantastic. This growing earning will always push the stock price higher. And the revenue is growing for the past 4 years. So overall, like every stock, it will have the risk factor, the negative factor, and it will have the positive factor. For you to make a decision, you can tally up to see is there more negative than positive or vice versa, and this will help you make a decision. The second stock we're going to look at is called Main Street Capital. This company provides debt and equity capital to mid-market companies. The dividend yield right now it's at whopping 9%, so that's very high and very good. The company plans to keep the payout at current level. When the economy gets back to normal, it plans to pay a special dividend like it usually does. So it's going to be an icing on the cake. So let's look at some of their financial metrics. The price earning ratio is at 14, which is very reasonable. The 26-week stock price change, if we look at the trend, it's going downward at 17%. So it's a negative 70%, which is, it's recovering, but it's not as good. So it's a risk factor. The return on equity is minus 5%, so which is also not that good, right? Preferably, I want to see more than 17%, but this one is negative. The earning per share this year will be down by 20%. That's also not that good. The revenue this year will be down 12%. So that's also a risk factor. So overall, as you can see, there's some negative risk factor, but some of it is made up by the 9% dividend. So you want to weigh it out. Are you comfortable with this negative factor? Do you think with the additional dividend, when the economy come back to normal, will make up for the negative side? You have to weigh it out. All right. The third stock is Shaw Communication. This is a Canadian telecom giant that provide internet, wireless, landline phone, and cable TV services. Its operation is proven to be more coronavirus proof than others. With people mostly stuck at home, basic services like phone and internet, it's important to let people work from home. The dividend yield is around 5%, which is decent. And let's look at some of the financial metrics. The price earning ratio is at 19, which is reasonable. And the 26-week stock price change is around 2%, which is not that good, but it's recovering. The net profit margin is at 12%, which is a little bit below than the 15% that I would like, but I won't say it's a risk factor. I mean, 12% is not that bad either. The return on equity is at 11%, which is not that good because I prefer it to be over 17%. The earning per share this year is expected to go up, and the revenue is growing for the past 5 years. So these are some of the positive factors. Overall, I think it's a pretty solid dividend stock. So the question is, how much do you need to invest in each stock to get $1,000 a month in dividend income? If you just invest in Stack Industrial alone, you will need $267,000 to generate the income. If you invest Main Street Capital alone, you will need $133,000. It's much lower because their dividend is very high. If you invest in Shaw Communication alone, you need $240,000. At the end, if you want to invest all three of them in equal weighting, then you need $195,000. Then you will get $1,000 a month in dividend income. Okay, I would like to get some feedback from you. Comment below. Let me know what is your favorite dividend stock. I also do private financial and tax consultation. For any inquiry, my email is listed in the description section below as well. I hope this video is helpful. If you like it, please smash the like button and subscribe to my channel. I produce new content every week and I don't want you to miss it. I will see you in my next video.